Well, hello, guys. It's Danny Deals here with you once again. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more, guys. It is June 27, 2023, a beautiful Tuesday out here in Los Angeles. Um, the time right now is 12:59 p.m. Topper time check. 12:59 p.m. Market's going to close here in less than 1 minute. The SOFI stock is up 42 cents on the day, or just a little bit over 5% on 38 million shares traded. Closed very strong. Did not do that little dip at the end of the day, that little sell off. Quite the opposite. Was sitting down at $8.57 with 40 minutes left in the trading day, and popped up another 7 cents on big volume there at the end of the day. Guys, some exciting news with the SoFi stock. Just want to get right into it and get you through it quickly. I know you guys are at work, you got busy things to do, you got to pick up the kids from school, get the little, or maybe it's summer, but you got to get the Rugrats to soccer practice or football practice or taekwondo, Suzuki, violin lessons, whatever the hell you're doing. Um, Guys, listen, we got 5 days ago, Truist Financial, Andrew Jeffrey, reiterated a buy rating on the SoFi stock and reiterated his price target at 11. Exciting news. Yesterday, Jefferies, guys, John Hecht, who is, again, a pure five-star analyst, guys. Not like, Bank of America 4-star, not like Compass Point 3-star, not like DBS 2.5-star, or Oppenheimer 3.5-star, or Wedbush 1/10 of 1 star. No, John Hecht, just like Andrew Jeffrey, is an absolutely solid 5-star analyst. And again, they don't call this an upgrade because they were already at a buy and $8, but they just reiterated the buy and raised the price target to $9.60, representing an 11% upside from here. Why do I say this guy's qualified? I'm just on the basis of tip ranks, which are back tested by real world results of their real calls. This guy is number 211 out of 8,500 Wall Street analysts and just under number 600 out of 34,000 experts that they track on the site. His success rate is 63%. So 308 trades out of 490 would have made a profit, and an average return would have been about 11%, guys. So as you can see, guys, not all information is created equally. Not all analysts are created equally. And again, absolutely no coverage in the press that Truist and Jefferies both reiterated their buy and that Jefferies raised their price target. Everybody hit the panic button at 10. Everybody hit the panic button. Bank of America, Piper Sandler, Oppenheimer with their simultaneous upgrades, and then Compass Point. Basically, that was a downgrade and an initiation from Baloney Head, Giuliano Bologna. Um, I don't trust this guy. He used to work at BTIG, and BTIG came out on the pump with a buy at 14 from this analyst, just again initiating out of nowhere. An analyst with absolutely no experience pumps the stock buy at 14, and then the guy who used to have his job and moved over to Compass Point comes in with a sell at 5. Now, presumably, the same company hired them. The same boss. They both had, expert qualifications, great education, but, a lot of experience, but, one on the pumps at 14 and one on the dumps at 5. And again, I know these guys don't know each other just because they work, he worked at the same company, previous company at BTIG for 8 years, ran the same department. I know, guys, I just see these conspiracy theories and coincidences. But anyway, I digress. Today, John Hecht with Jefferies reiterates the buy rating, raises his price target to $9.60. Not that you'd hear it in the media, you freaking turds out there in the financial media. Report this. Where is this on Yahoo Finance? Why don't they say Jefferies upgrades their price target and reiterates their buy? Of course not, guys. What's the headline you read on the top? SoFi Inc. Technologies dips more than the broader markets. What you should know. What is the Zacks score? Zacks score 1. you dipsticks. I hate these turds. Like, they can frame the narrative any way they want. Here you have SoFi, consolidating nicely after a massive, massive run. The stock 2x just pulled back, 20%, then popped back up, and it's been consolidating at $8.62. I told you guys, before any of this happened that the stock was going to consolidate between $8.13 and $8.91, and then push up and push past $10. And what happens, guys? Everybody's like, oh, some morons, and then they're like, the stock's in a downtrend. Like, can't you see that? The stock's in a downtrend. I'm like, what are you looking at? And then they're like, the stock's not consolidating. To consolidate, you need massive volume. It's like, dude, you guys read things on investing.com and you're brainless, brain dead trolls. The stock does not need massive volume to consolidate. The stock is consolidating. Guys, look at this key level right in the low 860s. When the stock dropped down from 957, gapped down, and then dropped off a cliff, it briefly found support at 875, but then really where the buyers came in, it was at that key level there, just above 860. Of course, fell down to 850, bounced back up, comes back down, guys, on 616. Again, finds buyers at that $8.63 level. Falls way back down here, guys, as you know, to $8.20. Pushes its way back up. Where does it find resistance? $8.64. Actually, this time it was more like $8.69. But you see it kind of plateaus there. Then there's like a little pump and dump. Falls back down to $8.40, pushes back up again right at this point on $6.21, finds resistance at exactly that line, pushes back up through it again, gaps down, falls off a cliff, pushes right back up and tests this area 3 times, guys. 1, 2, 3 on 622. Again, gaps back down huge on the massive FUD downgrade from Turd Baloney Head. The bologna sandwich. Oscar Mayer has a way of messing up our day. Guys, the Baloney Head is with us, but then what happens, guys? Immediately, stock finds support here at like 775, and then buying, buying, buying. And then what happens, guys? Right here, when we get to this level on 623, what happens on open? Guys, we bounce right up and find resistance again at $8.64, $8.62, whatever it is. I'm not getting down to the penny. Sells back off, back down to this level. Remember, guys, we saw it right here. We see it right here. $8.18. I told you support was going to come in at $8.13. And what do you know? I've been very much right. Stock goes up again, sells off again, guys. Finds support again at that $8.18 region. Pushes back up, and what do we see? The gravity, the magnetic gravity of the stock is here at 862, 863. Comes back in again, guys. Take a look at it. Where is the stock trading? 862, 863, 864. Keeps touching this level, keeps trading around this level. Challenge level resistance, challenge level resistance, trading right there. Guys, trading right there at 863. Challenged 863, bounced off 863, buying at 863. Guys, why? Why? I'll tell you why. Where do you kill options at 850? Where are options at 850 absolutely worthless? Those options are absolutely worthless at about 863, 864, whatever it is, 870. And what do you see when you look at the short-term options chart, guys? You don't even need to look. Where does the heavy volume come in? 12,000 calls coming in at that $8.50 strike for this Friday. 16,000 open interest. And at $9, guys, it's even worse. 26,000 calls and 27,000 open interest. We even have quite a bit of action at 9.50 and 10, guys. Probably counting on a favorable Supreme Court decision that would act as a catalyst. As I told you yesterday, I think it would act as FUD anyway. But guys, look at the chart. Look at the options. Tell me they're not connected. Crisscross. Eliminate the motive. Double bluff. Guys, I don't know how else to put it. They're going to try to kill these calls. I know the calls are way up. Today, if I was you, and I think the smart money did, I would have sold these calls and dumped them on retail idiots. And I'm sure that's exactly what they were doing, because they're going to do everything in their power to spread FUD and kill these calls this week. They do it just about every single week. Look at last Friday. Stock got downgraded, dropped off a cliff. And then if you look at the chart, guys, resistance comes in every single time. Low 860s, at the most high 860s. Like, the stock pushes up here to, I don't know what exactly this level is, 868. Pushes up here to about 870. Pushes up here, touches 875, but only like for half a hot second. Um, Guys, the stock keeps pushing up. I told you where it was going to consolidate. It is consolidating. This is exactly what consolidation looks like. You're finding a balance between buyers and sellers where, they think the true value of the stock is right now. Guys, I want to just give you a brief update before I go anywhere on the short interest. Parkside Investments LLC has 6.28 million in SOFI holdings. Vontobel Holding Limited buys 90,000 shares of SOFI. So, guys, yesterday's video, I showed you how institutions and insiders are actually loading the boat on SOFI despite the media FUD narrative that all the insiders are dumping all their shares. It is absolutely not true. Guys, in terms of the short interest shorts we're covering today, the short interest is still about 11.7% of the free float, actually up in the last 3 months, but that's not too relevant. Free float on loan is down to 18%. Utilization is all the way down to 52%. Cost to borrow is very, very low, guys. Cost to borrow max yesterday maxed out at over 14%. Today didn't hit 10%. The borrowed change, they were covering a return share, 7.5 million, borrowed 3.5 million for a net of 3.9 million shares returned on that borrowed change. So, guys, shorts are letting go just a bit. You notice the short kind of controls the price action on the stock. That's how they control it. That's how they're pegging that magnetic level around 863, 864. They're doing it with shorts, guys. Yesterday, they wanted the stock. Like, take a look, guys. Yesterday, they wanted the stock to go down. They shorted the stock. Today, they want the stock to go up to this particular level, just where they're killing options, and the stock goes up. I mean, this is how they control the price action of the stock, and this is how they've been doing it for many, many months. The algo is still alive and well, but the algo's having problems, guys. The volume has come out of the stock. If you notice, the volume had dropped down from those huge volumes over 100 million, 90 million, came back down to the 30s, then popped back up the other day to 60, and then yesterday was only 33 million, and today, just 39 million shares traded, which, believe it or not, is a pretty slow day for the SOFI stock. The sector, Upstart was up 11, Affirm only up 2, Lucid up 10, some of these growth stocks, Palantir up 5, Roblox up 7, PayPal was down a hair. Some of the other financial, fintech, Visa, MasterCard, American Express, basically flat or very, very slightly up. Guys, I would like to draw your attention to an article on Seeking Alpha by Ahan Vashi. This is called SOFI, the only bank you want to bank on right now. Extremely good article. It's very, very long, guys. I'm not going to take you through the whole thing, but basically, this guy did an analysis. Through his model of what the stock was worth back in 2022 when the price of the stock was very, very low. And he redid that valuation now, and he basically comes out, long story short, guys, he concludes the stock still has a lot of upside, that it's currently the actual value should be $11.75. He goes through that it's absurd that this stock was trading at 0.9% of book value, put absolutely no value on the growth, put absolutely no value on the banking as a service side, the Galileo side, put basically no value on anything. I mean, that's where this stock was trading. It was really, really quite odd. And then, from those levels, you had the Wedbush hit the stock with a $2.50 price target based on a bunch of made up FUD. But guys, I highly, highly recommend that you take the time to read this article. You can see on this chart how SOFI is performed next to all the other banks this year. It's obviously crushing it, up 79.83%, whereas most of the other banks, Citigroup and stuff, they're way down. A few of them are up just a tiny bit. JP Morgan's got a lot of good press and, stuff like that. And Citigroup's okay. I see who that is who's way down. That's just the spider. I'm sorry, guys. Invesco, that's down. Bank of America, well down. Goldman Sachs, of course, also down 8%. Morgan Stanley down just a little bit. They, of course, had a lot of bad press and FUD around the, insolvency rumors and all that stuff when SVB, Silicon Valley Bank, was going out of business there. But investment thesis, SoFi Technology is a member-centric, fully digital. They also allow members to borrow, invest, save, protect their money. In addition to digital banks, SoFi provides banking as a service solutions via its technology platform, Galileo plus Technesis, to customers, including financial. Despite facing several macroeconomics and political regulatory headwinds in recent years, i.e., inflation, rising interest rates, the U.S. government essentially paralyzing SoFi's core student loan refinancing business, SoFi has managed to pull off a remarkable evolution from being a student loan refinancing company to an all-in-one consumer finance platform and digital bank. Given the dire situation with this core business, SoFi's evolution has been nothing short of incredible and proves the resilience of its emerging force in the banking industry. Since Anthony Noto took over as SoFi, the company has undergone a complete cultural reset, which is now centered around rapid innovation and product-led growth. And in my view, Anthony's vision and meticulous execution from his team have led SoFi to the cusp of profitability and set a bright future for the company. And they talk about how SoFi is primarily a lending business right now, but over the coming years, it will be a well-diversified fintech company. The crux of the investment thesis is the cross-selling of financial products to a loyal member base from a singular digital substrate. At scale, SoFi should be able to generate better unit economics and profit margins as compared to traditional banks and other financial institutions. Despite robust revenue growth and rapid margin performance, SoFi was trading like a legacy bank at price-to-book ratio of 0.9x with no value attached to its technology platform back in early November 22 when I highlighted SoFi as a strong buy in light of its Q3 2022 report due to asymmetric risk-reward on offering of long-term investors. According to TQIs, this was back then the valuation model. They had shares worth $11.40, implying a combined annual growth rate 31%. SoFi should be trading over $22 by 2027. Since that call, SoFi stock has rallied more than 50%, which it's with its valuation catching up to best of breed banking peers like JP Morgan and Morgan Stanley. With SoFi stock now trading at a price to book ratio of approximately 1.5x, it is no longer undervalued on a relative basis. That said, I continue to believe that SoFi deserves premium valuation compared to traditional banks due to a multitude of factors, including but not limited to faster revenue growth, superior long-term margin profile due to far lower overhead expenses, and no physical presence. This is critical. Guys, read this article, Seeking Alpha, Seeking Alpha, Seeking Alpha. They have the best damn authors for these things. You get in-depth, you get numbers. Stop reading this drivel. I don't get paid by Seeking Alpha. I don't have a referral. I don't care. I pay full boat for it. But I really, really highly recommend this site, and I think you should read this article. I think they give you a free trial, too. Get over there and read it. Now that we've revised our investment thesis for SoFi, let's rerun it through TQI's quantamental analysis process to see if it's a good buy at current levels. So they run this thing through, guys. They run all their numbers and all the assumptions. You can see the quarterly performance going from 322 million in Q1 22 to 460 million last quarter. Adjusted EBITDA continues to go up every single quarter, as does adjusted net revenue. You can see the models. You can see what they put in. You can see the segment financials. You can note absolutely how fast the financial services segment is growing. Note this, while SoFi is still primarily a lending business, the financial services segment revenue up 244% year over year in Q1 23 is growing much faster, and it looks on track to become SoFi's primary profit center over the long run, with this business segment starting to deliver operating leverage as it scales up. Critical, 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 guys. Read this article. Read this article. Seeking Alpha. Seeking Alpha. Read this SoFi article. You will get more bullish than you've ever been. You'll be snorting. You'll be, goring people with your horns. It's going to be pandemonium. As we saw earlier, SoFi has bet on cross-selling financial products. We know this stuff, guys. The company is seeing rapid expansion in margins. Guys, with SoFi's financial services productivity loop hitting an inflection point, The company is seeing a rapid expansion in margins. This is quite visible in Q1 2023 results in management's guidance for Q2 and 2023. Financial services productivity loop, lending and financial services products. Guys, you can see the growth. Other banks can't grow anything. They can't grow their deposits. They can't grow their members. They can't grow any type of their investment banking activity. They're dying. And SoFi is talking about adding business checking. What does that bring you into, guys? It brings you into payroll. It brings you into healthcare benefits. It brings you into retirement. It brings you into a million other things we haven't even thought of, guys, that involve B2B. How much money is sitting in business checking accounts being held hostage by the big banks while it earns 0% interest? Given cross-selling products is the core of our crux of our investment thesis, SoFi developing a loyal member base. So far, SoFi is doing an excellent job on this front, amassed 5.7 million members, up 46% year over year, and 433,000 quarter on quarter. This is likely to continue rapidly growing through 2023 and beyond. Currently, one area of weakness is SoFi's business is technology. Yeah, it's been a drag on the business. Revenues rose 28% year over year, but Galileo accounts declined sequentially from 131 to 126 million, and the profit contribution fell 19% year on year. Guys, we've talked a lot about this. SoFi is trying to build out the AWS of fintech. Many critics have taken issue with a comparison to AWS, but the central idea for SoFi is to build a cloud-native BaaS infrastructure platform akin to AWS's cloud offerings to enable developers and business to implement core banking and financial services into their products with simple off-the-shelf product offerings. While this business segment is clearly not firing on all cylinders at this time, SoFi's management did provide some positive commentary here, with 5 new clients coming on board during Q1 and progress on SoFi's strategy to sign larger, more durable clients. So it is concerning to an extent, but his investment thesis does not depend one bit on this segment, and I simply view it as a free embedded option in SoFi stock. Guys, that's what I've been saying. No one gives Galileo any value because it's just not big yet. They've revamped the whole thing. They've combined Galileo and Technesis. There's going to be some growing pains, guys. They're integrating two completely different companies that had nothing to do with each other before SoFi bought them out. And yes, we paid a lot for these companies. And yes, there was a lot of dilution. But I firmly believe this is going to pay huge dividends for the patient shareholder. And this guy believes SoFi stock is worth $11.75 and putting a value on Galileo of nothing. In addition to delivering robust product growth, sorry guys, SoFi has maintained a healthy balance sheet. Everybody talks about how bad their balance sheet and debt is. It is absolute garbage. SoFi's strict lending standards and a cash cushion of $2.5 billion. I see no major liquidity concerns. FUD from Wedbush. They're going to have to raise money this year at high interest rates. Absolute nonsense based on a throwaway boilerplate sentence in their ER, in the legalese. It's absolute garbage. Wedbush, the Chia Pet, absolutely corrupt short seller turd, in my opinion. So go on to talk about the student loan borrowers' weighted average income, 173,000, weighted average FICO, 769. This focus on quality has long led to strong credit for performance, with balance sheet delinquency rates and charge-off rates remaining healthy and well below pre-pandemic levels. As I see it, SoFi's focus on serving high-earning, not well-served customers give it an edge over many of its fintech rivals. That is the huge edge. They have better technology, better business model, and critically, better management and better customers. Better management and better customers. The management executes, has a better plan. The customers have more income, higher credit. They pay their bills, guys. They pay their bills. It's all FUD that these SoFi borrowers are going to stop paying their bills. Guys, SoFi increased adjusted revenue guidance from 192 to 2 billion from 1.92 to 2, that was their range, to 1.95 to 2.02. So just kicked it up about 25 million bucks. Not much, but it is something. And listed the adjusted EBITDA guide from 260 to 280 to 268 to 288. So that's actually an increase of 14% adjusted EBITDA, 14% adjusted EBITDA margin and an $8 million increase in their EBITDA range. Again, very conservative, not huge guidance raises at all, very, very marginal, but again, how many fintechs and banks are raising guidance? How many of them are doing it? Not many that I see, guys. Not many fintechs are marching toward more EBITDA and actual net profit. Most of them have been, seen their bottom line absolutely fall apart in the last few quarters. But guys, again, this goes on, and they go on to the quant factor grades. Of course, profitability is an F because they're not making a profit, but that's totally unfair. Goes on to talk about the chart and why the chart is so incredibly bullish. Right now, you see this channel that the stock traded in. You see the resistance here multiple times at 8. Some moron online's telling me there's no resistance at 8. Doesn't even barely know how. It doesn't even have a pulse. A total flatliner. After threatening upside breakout in recent weeks, so as rock burst back to an I shape with a pullback of 20%. Again, MECD rolling over, RSI just under the overbought territory in the daily chart. SOFI's chart appears to be losing momentum. However, this is exactly what I've been saying, guys. However, we could very well be experiencing a healthy technical correction before the next leg higher. And I say so because SOFI's business performance is going to get even better on the back half of 2023. Federal student loan moratorium, rapid expansion of its deposit base, looking a little bit further into the future. I think the ongoing rate high cycle is in its last innings. Interest rates should stabilize soon before heading back lower in 2024 and 2025. If this happens, credit markets are more likely to unfreeze in the next 6 to 24 months, which would allow SOFI to unlock greater new lending capacity through sale of loans from its balance sheet. Hence, I think SOFI can maintain robust growth in 2023, 2024, and beyond. With the business consistently exceeding management protections and consensus Wall Street estimates, SOFI's stock should eventually catch up to its fair value. Now, let's see what that fair value is. They go ahead and plug in their assumptions, guys. They have all this models. According to TQI's valuation model, SOFI is now worth $11.75 per share, up from my previous estimate of $11.40 per share. With SOFI trading at $8 per share, I see another 42% upside in fair value from current levels. Completely agree. My price target is currently $13.75, but that's a one-year price target, not a current price target. Now let's consider long-term reward potential by looking at price expected outcome. SOFI, assuming an exit multiple of 1525x. Guys, I'll let you go through this. I can't read all of this, but CAGR, which now imply 22%. Concluding thoughts: despite 80% year-to-date rally in its stock, SOFI still qualifies as a buy under our QA process with a mix of fundamental, quantitative, technical, and valuation analysis. As of writing, SOFI's business fundamentals are robust. Quant factor grades are improving. Technical momentum looks strong, and the stock is still undervalued. Hence, I continue to remain bullish on SOFI stock at $8.28 per share. And I continue to remain bullish on the SOFI stock at $8.63 or whatever the hell the stock closed at today. Key takeaway: I rate SOFI stock a buy at $8.28 with a preference for staggered accumulation using a 6 to 12 month DCA plan. Ahan Vashi, the quantamental investor, he's the leader of that group. I don't know too much about this guy, but he gets inside the numbers. I like his price target. I like his analysis. I like the way he thinks. I like where his head's at. Guys, SOFI stock, what's it doing after hours? Let's take a look. We did close at $8.64 today. I'm sure, yeah, we're down a few cents. We're down a wooden nickel after hours, sitting at $8.59. But guys, again, that $8.64 level has become critical. Shorts let go a little bit today, but short interest in the free floats still sitting just around 12% level, just a hair under. We got an upgrade in price target from Jefferies, reiterated the buy rating, got a reiterated buy rating from Truist. Those guys are both solid 5-star analysts, best in the business. A lot of the guys with the downgrades are absolute trash, absolute cabbage, absolute turds. And that's the way it is, guys. Shorts and bears are turds. They don't know what to do. They're trapped. SOFI keeps performing. A lot of good news on the horizon, and those turds are in big, big trouble. I told you the stock was going to consolidate a long time ago between 891 or 813 and 891, and it has in fact done so. And after it does that, I said it's going to break back up and go through $10 in the next couple of weeks, and I still think that's going to happen. Guys, time will tell if I'm right. And speaking of time, guys, I have been going on forever, like Father Time. Sometimes I feel like these speeches were written by Moses, but that's how long they go on. But guys, there is no script, there is no editing, there is no nothing. I simply get on here and ramble at you for 30 minutes. So you're welcome, guys. On behalf of myself, Danny Deals, on behalf of executive producer Kane Lopez, and supervising producer Stock Karen, we would like to thank you for tuning in today. Topper time check, it's 1:29 p.m. out here in beautiful sunny Los Angeles, making it about 4:30 out in NYC. Hope it is a wonderful, beautiful day or night wherever you are. Hopefully you are buying and enjoying this nice little green day on the SOFI stock. And we wish you the best. It's been great. Thanks for joining us, and we will talk at you tomorrow.